I'm Garrett Lill with Matt Dahl of ARPG in Las Vegas. Matt, happy Friday to you. Happy August 15th. So we're in the waning days of summer. Still pretty muggy here. Not as bad as it has been. It's been wet last week or so. I think I need to invest in some swimmies to get to the car half the days. But good to see you, bud.
Good to see you. It's hot here. It's just good old hot.
You get hot and dry though. What do y'all get? Like 3 days of rain a year?
If we're lucky, seems like took we took our son to like a baseball practice thing last night called Glove Club, and there was a little bit of a breeze, and it was 105 breezy.
Yeah.
It was just like standing in a hairdryer.
I'll say that's a breeze isn't really doing you any good when it's blowing 105-degree weather.
No, no, there was
105
no
degree air.
swamp cooling effect at all.
Yeah. Good stuff, man. Well, good to see you as always. So we're just kind of doing a breakdown of the market. You said the market's it's been kind of flat. It's not really flat since we last talked. It's up about 1%, but most of that was on Tuesday. So what happened on Tuesday, and what has that meant for the last 3 days? Wednesday, Thursday, and now first 4.5 trading hours of Friday. Or what has it been? 3.5 hours, I guess, of trading on Friday have been pretty flat. So what's going on?
Well, Tuesday, the CPI came in. Core CPI came in at 0.32. Consensus was 0.29. So it came in at 0.3. Consensus was 0.3. It came in and met expectations. It wasn't overly hot. There's still no, at that moment. Now, obviously, 2 days later on Thursday, it changed a little bit. Okay, with the PPI number, but what happened on Tuesday was CPI came in pretty good, right? And the market obviously clearly immediately priced in maybe two rate cuts in September. Besant came out during the week also and said that he's looking for 2 rate cuts in September. Okay, so there's a lot of this debate now. It seems like the bond market and the equity market has followed, saying, okay, well, we're no longer in a discussion, are we going to have a rate cut or are we not going to have a rate cut? It's, are we going to have a double rate cut or a single rate cut? And I think that kind of popped that leg up, right? That's sort of from kind of that 6,300 level, 6,350, and then up into 6,375. And then we saw it kind of pop up 6,450, 6,475 range, okay? But we're starting to see, on a weekly basis, the momentum kind of roll over, which it should about this time of year anyway. We know this is a really rough time of year. That August, September, October timeframe tends to be seasonally weak, and there's always, the market's always kind of looking for a reason for the shoe to drop. There's always looking for a reason for a pullback, which is probably why we won't get that big of a pullback, and everyone's going to want to buy the dip as soon as we get any sort of a dip. So, but what I found surprising was not so much that the market rallied 1.13% on Tuesday, was that it rallied 0.13% on Thursday when we got that incredibly hot PPI number. Okay, now we know PPI typically leads CPI, and it's more component oriented than anything else. It leads CPI by kind of 2 to 6 month range, depending on what sector you're looking at, right? So if you look at groceries, PPI typically leads CPI by about 2 months. Okay, if you look at more manufactured goods, that's a bit of a wider delta. That will lead CPI by 3 to 6 months. Okay, so we saw PPI come in at 0.92. Okay, came in at 0.92 on a 0.2 consensus. So it came in at 0.9 on 0.2 consensus. It just absolutely came in not just hot. It came in like
Vegas
those
hot.
Buffalo Wild Wings blazing hot, burn your eyeballs off, habanero ghost chili pepper hot.
Hang on, first ADD break sponsored by Adderall. Have you tried the Jersey Mike's hot honey Philly cheesesteak?
I have not. I'm a huge fan of hot honey pizza though.
Really? Hot honey must be like a new this new phenomenon that seems to be all over the place now. There's hot honey everything everywhere, and I didn't even know about it until there's a Jersey Mike's like walking distance, so that's in my regular rotation of takeout, and I looked it up. There's a hot a hot honey chicken Philly cheesesteak. Fantastic sandwich. Hot as it is, blazing hot. I mean, I'm I don't know. I like hot stuff. I don't have the highest tolerance in the world for hot, but I can usually handle. I mean, I've done like a hot wing challenge before. I mean, I got my teeth kicked in and only made it through like one wing, but I at least tried it. I can handle hot stuff. This was hot though. It's got your regular chicken Philly stuff, but it also has pepperoni, which is a nice little addition I didn't see coming to add in. So totally unsponsored. I'm not getting compensated nearly enough to say this, but the hot honey chicken Philly from Jersey Mike's, fantastic. Highly encourage it.
Well, now I'm going to order a hot honey chicken Philly cheesesteak from Jersey Mike's Subs.
You absolutely should. Like that should be that, because you've not had lunch yet. This is only 10 o'clock in the morning for you, so that should be your lunch today. In fact, I may go ahead and just order it for you and DoorDash it to your office.
You should. Honestly, in the next show, I'm going to be wearing a Jersey Mike's hat, eating that sub, right? Just covered in like a nice honey glaze.
I haven't had lunch yet either. I think that might be my
shiny.
What's that?
I'll be very shiny.
This could get really sidetracked if we don't get back on track. All right. Anyway, yeah, that may be my lunch today too. Actually, now that we think about it. But anyway, where did we get? You said it's the PPI number was scorching hot. That's where we got on the hot honey.
It was scorching hot, right?
Yeah.
But honestly, half of that number was margins on manufacturer wholesaling equipment, and also portfolio like financial services, because the stock market's up. There's people doing a lot of trading right now. That's caused kind of a spike in that. So that was about, I don't know, 17, 18% of that. The other 30, so actually more than that, was about, so between the two, it was half. And 30% was was margins in manufacturer wholesaling. Now, let's dive into what that means. Okay. So if 30% of July, the high PPI for the month of July was margins for machinery and equipment wholesaling, okay, it jumped 3.8% month over month. Okay. It wasn't just because of the price, it was the margins. They increased margin. Why did they increase margin? They're trying to put cushion in now for when the tariffs do show up, which have yet to show up. Okay. So again, here we are waiting for Godot. Now, what this is a fancy way to say we baked in margin inflation. That's what they call greedflation. They raised their
basically increased prices so that when their prices went up, they would
have the cushion there. But here's the thing: when the tariffs don't show up, and obviously they have increased margins, I don't think they're going to take
them back down.
I don't think they're going to give it back. So there's just a lot. And here's the thing: is PPI, even core PPI, is a very, very volatile indicator, and that's why the bond market didn't freak out. Okay, because if you notice, the bond market was basically stuck 425, 427, 424 most of the week on the 10-year. Didn't move all that much. It only actually popped up today a little bit because of the good retail sales number. That jumped 0.5% month over month. Okay, strong retail sales. So we saw the bond market sell off a little bit because on the retail sales side, but not so much on the PPI side because it's so volatile. So if you look back to April of this year, PPI was negative 0.2. May was positive 0.42. June was negative 0.03. July was positive 0.92. So it's just all over the place. So the average month over month of the last 4 months is 0.27. That's what it is. Now, the 3-year average for the PPI, 0.25. So it's not out of whack, and I think the bond market saw it. I think the bond market really dove in, lifted the hood of PPI, saw it was margin based, saw it was financial services based, and kind of just whiffed at it.
So, what is if you take a slightly longer term view of the 10-year? Nothing major. I mean, the 10-year has been pretty quiet for the last several weeks. Floating right around a midpoint of around 435 to 440, it looks like, for the most part. We have seen just a little bit of a lift since August 5th. So we were about 419 on August 5th, and we're up to 432 now. Nothing crazy, 20 basis points or so of lift. What is if you take just a slightly longer view than just 1 week and look at the last couple of weeks. Is that a trend, or is this just a blip that doesn't really mean anything?
Well, we're of the view that the 10-year is going to start to roll over, okay? Because we do see cooling labor. We did see the jobs come out. That obviously was cold. We now have 37,000 average 3-month average job creation, which is very, very low. Now, obviously, the break-even rate is much, much lower without immigration, and that's a whole other subject, right? Break-even rate used to be about 100,000 jobs a month, right? Now that's well below 100,000 jobs a month. Okay, we're not really sure what that number is now, but it's much, much lower. So, I think the market is really paying attention to that labor rate, and it's not really the inflation numbers. They're going to wiggle around, but I think the bond market, we talked about this last week, is the eye of Mordor. It's turned its eye to the labor market and it's turned away from the inflation side. Okay, and we're of the view that we're going to see. I don't think the labor market is going to collapse or anything like that, but I think the bond market is going to be very, very, very sensitive to any sort of developments in the labor side. Okay. And we think, with the dovish Fed, obviously it's going to start tilting very dovish clearly into 2026, whomever takes that role as the Fed chair. But fortunately or unfortunately, it's going to be expected that this Federal Reserve is going to communicate the dovish side of the Federal Reserve. Whether the participating voting members are in agreement or not, the chairperson, is the voice, is the face of that group, right? And for good, bad, or otherwise, Powell, I think, has been very measured, but he's been very measured, leaning very hawkish. And I think, and we've talked about this before, but I've been a fan of Powell for a long, long time. I think he did a great job of fixing a problem that he created or they created. Okay, but again, the moniker of too late, Jay Powell. I don't know that it's not deserved. I don't know that's not deserved. We thought that they should have cut early on, probably in June, definitely in July, and now they're talking about a double cut in September. So if the labor market does an about face, okay, different story. We might see a little bit higher 10-year, but I don't think we're going to see that. Okay, and based off, we have pretty good JOLTS numbers right now, but I really believe that we're going to finish this year sort of in that 3.5 to 375 range on the 10-year, which is what it's going to take for the equities to really get to that, to that our tale of two markets, whether we finish 6,200 or 6,900. There's no in between. There was no sort of a 6,200 and a stretch target of 6,900. It's either going to be this way or it's going to be this way. I don't see anything in the middle. Okay.
If it lands 65.50, I will never let you live that down.
It's going to 100% now land 65.50, and I'm going to wear a dunce hat, but it's going to have with the straws into my mouth. It'll be Pabst Blue Ribbon.
Now I'm second guessing my math on that. That is the average, right? 65.50.
Well, so 65.50, dead on. Okay. Dead on. Good job.
Yeah.
Good job.
Nice.
So I don't really see that taking place, because I see the bond market really start to price in that Federal Reserve. Okay. Now this is assuming that the data directionally maintains itself for the most part. Okay. Now, again, if the labor market makes an about face and all of a sudden we're producing 225,000 jobs a month and inflation, spikes back up to, 40 basis points a month, well, that's a horse of an entirely different color. Now we've got we're going to have a 10-year that shoots over 5, but we're not seeing that directionally in the data.
Let me ask you that, because I don't follow politics that closely because I value my sanity and I don't like to get angry about things I can't control. So I don't follow it that closely. But when you talk about the Fed becoming dovish, is there a chance that the Fed moves hawkish next spring? I mean, is it just a given that everyone knows that it'll be a more dovish Fed next year, or is that just an assumption that the market has?
It's the assumption the market has, and the market will be right. Okay, so it's a good thing for the market it's a bad thing for the economy in the long term. Okay, having the monetary policymakers be fully independent without pressure, without influence from the fiscal side, from the president, from the Congress, whomever, is one of the tenets. It's one of the cornerstones of how our capitalist society functions. Okay, it's a cornerstone of capitalism. It's a covenant of capitalism, to use one of the terms. Okay, and are they still independent? Yeah, ish. Okay, they are. Okay, but are they less independent? Definitely.
Yeah.
So, President Trump, knowing President Trump, he's going to nominate someone he knows is going to sing the song he wants them to sing. Okay, good, bad, or otherwise. I'm not criticizing that decision at all. I'm just, it's clear from how he tends to nominate folks for his administration posts that they need to be in agreement with. He likes people taking the other sides. I've heard that too. But in this case, President Trump believes he knows better than the Federal Reserve. Okay, and that's a matter for others to debate, not us. Okay,
that's pretty much the hallmark of Trump's just entire ethos, is thinking that he knows better than everybody else, right? We have to make sure we get a Trump line into every show. I think I told you a few weeks ago, we need to rebrand this thing the Intelligent Trump Update, because if you put Trump in anything, it gets like 10 times more views than everything else. So we got to get our weekly Trump plug in. You mentioned something else. Sorry, go ahead.
Well, I was going to say, I mean, we talked about this in March. Or it was in April. It was the show after the spike in April that he may be the most powerful human that has ever existed. And that's up for debate because he has such an ability to communicate to so many people, for very important topics at one time, and it tends to move markets and all kinds of geopolitics very, very quickly. So knowing that we know and the world knows that he thinks he knows better where interest rates should be than the Federal Reserve does. And I'm not here to say that he's right or he's wrong. I'm not here to say that. But he's going to make sure that he nominates someone who is going to agree with his take on things in this particular position. At least that's our take. Our take is that take.
Yeah. And you mentioned something just a second ago that kind of, I've never heard this. You said there was a chance of a double cut in September.
Yep.
How does that work? Because we only have one Fed meeting, right? Did I miss something there?
So there is let me see here. Okay, so 420 there. Well, no, now it's down to 0%. There's a 0% chance, according to CME FedWatch, that there's going to be a double cut.
Okay, so totally kidding.
Double cut.
We didn't mean that at all.
You never know. You never know. Things could change. But
so a double cut, would that just mean it's not just
points.
It's 50 base? So it's just one cut. It's just a bigger one. Okay, gotcha.
Correct. Yeah.
I was gonna say I didn't think, are we gonna call like a second meeting just for the fun of it? So I didn't. I misunderstood that. But
that's I remember my dad used to go to Jerry's Nugget and he would order the double cut prime rib.
Nice.
There was the queen cut, the king cut, and then the double cut. And the double cut was 2 king cuts. And I'm telling you, that thing looked like a pot roast. Jeez. I mean, it had to be 3 inches tall.
Yeah. I mean, what is that? 24 ounces of prime rib?
Oh, no, this thing was at least 36.
Oh, wow.
Yeah, I mean, you definitely wanted to throw it at people you were going to start a fight with, because it'll definitely start a fight. It's huge.
Dude,
I mean, if you didn't eat it fast enough, use it as a wheel chalk.
I wasn't that hungry when we got on this thing. Now I'm starving. Between the Jersey Mike's and the prime rib talk, I'm this close to going to Golden Corral and just picking out of the buffet. You know what I mean? Like, I don't even know what I want anymore.
Over here in my dish, I'm gonna go grab a banana and just start eating it. But my director of operations, she got me a cold brew coffee this morning, a big 24-ounce cold brew. I guess those have more caffeine than regular coffee. So I chugged it with some protein, and I'm surprised I'm not doing the show from the wall behind us right now.
I think your tempo is up just a little bit. You know, I think your average words per minute's up about 25-30% this show. You're rattling them off pretty good. Someone
Yeah, I'm
recommended
surprised my heart's not like beating out of my chest like a cartoon right now. You can't see it on the screen.
Someone recommended a diet to me the other day. They said that one of the Monster Energies, whatever they've been drinking these things, you drink one of them a day, and it's like you're not hungry for 8 hours. And I don't think that's healthy at all. But I did try it; it works really well. I have one for breakfast, and I wouldn't eat again until like 8 o'clock at night. So you get enough caffeine. Food's optional, but I haven't had enough today apparently because I'm starving right now. But I wasn't hungry till we started talking all this food. So. So anything else on the radar for the markets? We're kind of in a little bit of a cool period now before, in between earnings season. It's the historically quietest month of the year or slice of the year. So anything coming up in the next little bit that can rock the boat or give CNBC something to talk about?
I mean, yeah, we have NVIDIA earnings coming out on the 27th. Of course, that's always a big deal. They are numero uno on the S&P now as far as the market cap is concerned. We're really anxious to see how far they blow their earnings away. I think they're going to surprise this time, and I think we're probably going to get a little spike in the share price. There's just been a lot of demand for the Blackwell. The demand on the Blackwell has increased. It's still 17-1. Retail sales, to kind of go back to that, came in very, very strong. Came in at 0.5 month over month. Again, that's 70% of our economy. So that tells us the economy is still doing fairly well, and that's why we saw the bond market sell off today. But yeah, it's a pretty quiet time of year. I was a little surprised to see the move in United Health today. It's up 13%, and it's really moving the Dow. Okay, because the Dow is a price weighted index. It's not a cap weighted index. So being that the United Health has a high price, it tends to move the Dow significantly when it does move. But, I'm not a fan of that stock. I wouldn't be a fan of that stock unless I saw one handle on it, right? Because, you get all of the volatility and none of the return with that stock. But what I was surprised to see was who came in. I wasn't surprised to see the guy from Scion, Michael Burry from Scion Investments, buy it because that's what he does. But I was surprised to see Berkshire Hathaway buy it because it came out as a 13F filing from the end of Q2. So it's lost some ground since then. I was surprised they bought it so quickly on the pull down and not let it kind of base out a little bit. Those guys over there, they're pretty sharp. So, it's and not only is it I think it has room to the downside from here because they have a lot of cleanup work to do. But that's typically not in a wheelhouse you would find in Berkshire Hathaway. It's a very volatile stock. We call it a bathtub stock. It just sloshes from one side to the other, but you never really make any money. I mean, it's a trading stock. Is it investable? I think it probably will be with this new CEO, but I don't see it something that I would invest in until I was very, very, very confident it had formed a very long-term base, or I was getting it at, something like 9 times earnings, and it had, it had a long-term growth forecast of 27%. I might buy it at a 3 peg. That'd be about it. Yeah, nothing more, nothing really good. Otherwise, it doesn't interest me. The volatility is just too much for me to deal. It was like dealing with. I remember we owned its competitor for a long time, Cigna, and we owned Centene, and it was the same thing. It was just these things were. I mean, we did okay on them, but I mean the return versus the risk that we took as measured through volatility was terrible, right? So when we owned Centene and Cigna versus when we owned all the tech companies, the tech outperformed these 5-1, okay, but the volatility was 2 or 3 times these tech companies. So it's just the juice just wasn't worth the squeeze. And here, that's what I was getting at. I was surprised to see that Berkshire went into this position because a company like that, that's more of a trader stock than it is more of an investable stock. And those guys are typically, from what I gather, are investors.
You touched on something there that I don't think we've talked about before. I know we've talked about the S&P and the equal weighted index versus the traditional S&P 500, which is a market cap weighted index. I think a lot of investors don't realize how the different indexes are calculated. I don't know what the percentages would be, but I'm guessing a large segment of investors would assume that the S&P 500 was just an average of all 500 companies, but they don't realize that NVIDIA is 10, 12, 15% mark of that because they're by far the largest. But the Dow is, you mentioned, a price weighted index. Is there any good reason in the world to have a price weighted index? I've never understood that about the Dow. It is literally the share price itself. It doesn't matter what the total company is worth. It's just the per share price, that the more expensive stocks per share are going to be more heavily weighted in the index. And if you're a $10 per share, it doesn't matter how many shares you've got outstanding. If you're $10 a share, you're going to be a little bit smaller. Is there any good reason to have it that way, or to for the Dow to be set up that way, other than the fact that it has been for 100 years?
No, I think it's a dumb idea. And I think
that's what I thought. I just want to make sure I hadn't missed something.
Yeah, I believe it was Charles Dow and Edward Jones, the Edward Jones from Edward Jones, that created that index. And I think it was just two old guys in the early 20th century putting stocks in there. Like, let's just take the biggest stocks with the biggest prices, and they put it in there. And it's a horrible idea.
Yeah.
I mean, there some of the better technicians find utility with the Dow. I don't. Okay. I don't, because I mean, United Health is the market cap of United Health, I want to say, is about 180 billion. Okay. I mean, it's versus Apple, which is nearly 4 trillion. Okay. Yeah. So it's almost 20 times the size of United Health cap wise, but but United Health has a 30% more effect on the Dow than Apple does.
Yeah. Makes absolutely no sense.
That doesn't make any sense to me.
Yeah.
So, I think it's a bad idea, but it has big numbers. And that's why people, the Dow was up 800 points today, and it was the Dow lost 1,200 points today. Lock up the women and children. They're coming for your bank accounts. So it's the headline index because of the big numbers, right? But, I find, honestly, I have not found a lot of value in the Dow myself.
And it's not just that
it's for that reason that you brought up. Sorry to interrupt, but it's exactly for the reason you brought that it's a price weighted index. It's not a cap weighted index.
Yeah, it doesn't. It wouldn't. I mean, there's, I don't know, dozens and dozens of indexes out there. It's just one more index. It's not that big a deal. It's just that it is such a popular index that I can guarantee you that I heard about I knew what the Dow Jones Industrial Average was long before I knew what the S&P 500 was. I mean, by the time I was 12 years old, I probably knew what the Dow was. I didn't know how it was calculated or how it worked or any of that stuff, but I'd heard of it. But once I learned how it was put together, it's like, why do we follow this thing so closely? We have our fantasy football draft tomorrow, and I'm telling you, the way the S&P 500 is put together, it's like scoring fantasy football based on which one wears the color red on their wristbands, gives you an extra 10 points. And if you trip and fall on your way out of the tunnel, you lose 5 points. It has absolutely nothing to do with the way the game's actually played. The Dow itself, the way it's calculated, just doesn't make any sense. Like you said, Apple is 20 times the size and counts a fraction of what United Health does on the index. So you will see some odd days there where the S&P may be up, 0.7% and the Dow's down 0.2. It doesn't happen very often, but if one of their big players has if one of the big components has a big move, it can, you can see a bigger disconnect sometimes. But for whatever reason, it seems like the general market community just overlooks that, and it's still, otherwise it wouldn't be so commonly followed. Anyway, that's my soapbox for the day.
I honestly, I think if people kind of knew how it was calculated and versus how it should be calculated, I think it'd be less popular than it is. But again, I tend not to follow it just for this reason. I mean, sometimes, we're the beneficiary of it because the Dow will have a terrible day and it'll just be because of something like Goldman Sachs had a bad day or United Health had a bad day, something with a large share price that had one very bad day really moved the Dow down 300 or 400 points or something like that. Okay. But the NASDAQ had a decent day. Okay. And we tend to kind of lean into that growthy NASDAQ side a little bit. So clients are like, oh my gosh, I noticed the Dow was down like 400 points the other day or, yesterday, but I was up, like 0.5%. Great job. What are you guys doing over there? Well, nothing. Nothing. The Dow's a dumb idea and you shouldn't pay any attention to it. that's kind of it, you know. And they go, well, what do you mean? I go, it's never mind, you know.
Yeah,
Like,
you're right. We are brilliant. You're welcome. Yeah, that's
like I didn't eat a big enough breakfast to explain market cap versus price cap. You know, just you're welcome.
Well,
You're
it's
welcome.
not even. I mean, I think when the first version of it came out, it was actually an index of industrial companies. I don't know what it is now, but I mean, we've talked about Apple, we've talked about United Health, we've talked about Goldman Sachs. None of those three are industrial companies. I don't even know if you looked at what it's comprised of. It's even necessarily heavily weighted in industrials, or heck, there may not be an industrial company. I don't know. There's got to be a couple in there, but it's just a random list of companies that everybody tracks. I don't know.
Right, exactly. I don't get me wrong. I wasn't there. You weren't there at the table when those two guys put together that industry. And,
they didn't ask us.
Back then, when they did it, you know, 100 years ago or whatever it was, companies, the larger the company, the higher the share price probably was, because they didn't do stock splits and things like they do now.
Right.
And that may have been the most effective way to look at the size of a company. Well, how big is its price? The biggest price, that's the biggest company, because we didn't have the communication apparatuses we have today. Okay, so there's that. So it's to be fair to them, that's probably why they did it that way. But they've kept that same calculus over. I think having the 30 of the largest companies, you know, in it, you know, from all sectors, you know, in an industry, but on a cap weighted basis would serve some usefulness, you know.
Oh, 100%.
In fact, there's an ETF. It's an Invesco ETF, I believe. Invesco, I'm not sure. It's QTOP. Okay, it's QTOP. KTOP. I'm sorry, QTOP. It's the 30 largest positions in the Nasdaq. Okay, on a cap weighted basis. Okay. Now, if you took that ETF and looked at that, that's an interesting way to do it. Next, that's one. We took a position in QTOP this year, at the very beginning of this year, and our macro portfolios use ETFs, where our normal portfolios use individual stocks. So our macro portfolio, our core position in our macro portfolio is the QTOP, okay, because we like those positions. We like the biggest position in the Nasdaq. But the QTOP in and of itself, I would find to be a very interesting indice, because
what
it's
about
30 stocks.
Is there an ETF out there that is either equally weighted index of the Dow stocks or a market cap? Because you said that the QTOP was Nasdaq, right?
Correct.
So is there a Dow ETF that's basically what the Dow Jones would be if the Dow Jones were done correctly? If not, we should totally create that. You should create it and pay me a small royalty for coming up with the idea.
Hang on. I'm going to consult Google here. Dow Jones Industrial Weight Equal Weight Index ETF. So, well, let's see. I'm not. I mean, it sounds. If it was equal weighted, yeah, EDOW. The EDOW.
Okay, the EDOW.
It's called the EDOW. It's equal weighted.
Is there a market cap weighted one?
But that's not cap weighted. That's equal.
Yeah, is there a market cap weighted one? Surely there's got to be one. We are not smart enough to be the first two people to think of this. There's
you know what? Shame on us for not knowing this.
Seriously.
Cap weighted Dow Jones ETF. There has to be. Okay. Well, I don't see one. There might be one. I mean, there's the DIA, the DIA, which is the normal price weighted ETF. I'm not seeing it cap weighted. I'm sure there is one. I'm just not seeing it. But the EDOW isn't. The EDOW would be interesting because it would show breadth across those 30 companies.
Yeah,
you know?
The EDOW would make sense.
And
we should do this. If you have time for like a homework assignment, I want you to see what the performance of the EDOW is compared to the Dow Jones itself over whatever time period you can. And let's find a market cap weighted one as well and see what that performance looks like. And if there's not a market cap weighted one, we seriously need to figure out you need to start one.
We are getting better participation this year. And I actually look at that through that equal weight S&P, the RSP. The equal weight S&P 500 ETF is up about 7.25% this year versus the index. I think the S&P 500 is about 10, right?
Yeah.
So, this time last year, I want to say it was about 50% of the S&P. So we're actually seeing more breadth this year. But they should have some sort of a cap weighted down. Honestly, somebody's gonna hear this, and then
there will be
an ETF next week.
Yeah, it won't take them long.
Yeah, I'll have $1 billion assets.
For a show, I didn't think we had that much to talk about. We've gone actually a little long. We're at 35 minutes, and we didn't have but like 2 things to talk about. So between your coffee and my Jersey Mike stories, we've filled quite a bit of time here today. So this was fun. We should do it again maybe next week.
Let's do it next week.
All right. Well, as always, we're here just for entertainment, education purposes only, all that stuff. I'll play the disclosures here in a second. Matt, have a great weekend. I will see you next week, and hope you. What you got going on this weekend? You got any big plans?
Nothing really. Maybe do a little barbecuing. That'd be about it.
Nice.
Clean out the garage. We just had our AC system fixed in the house, so it's going to be a relaxing weekend. There's not much to do when it's 180 billion degrees outside.
Yeah. I've got, I'm going to be catching up on podcast editing for a good part of this weekend, and then being lazy as much as I can for the rest of it. So it should be a lot of fun. So we'll see you next week. Always a pleasure. Have a good weekend, bud.
Excelsior. I'll see you next weekend.
See you, man. Bye.
Discussions in the Intelligent Investment Show are for educational purposes only. The information presented should not be considered specific investment advice or a recommendation to take any particular course of action. Always consult with a financial professional regarding your personal situation before making investment or financial decisions. The views and opinions expressed are based on current economic and market conditions and are subject to change. There is no guarantee that any statements of future expectations will come to fruition. All investing involves risk, including the potential for loss of principal. Securities offered through United Planners Financial Services, member FINRA, SIPC. Advisory services offered through American Retirement Planning Group, ARPG and United Planners are independent companies. Garrett Lill and Wealth Partners are not affiliated with ARPG or United Planners. Any endorsement that I may have given during this recording, it is important to note that I am not a client of ARPG. The views expressed should not be considered representative in any way of my past, present, or future experience with Matt or ARPG. No incentives have been provided to me in connection with any endorsements I may have given on the Intelligent Investment Show. Investing involves risk, and there is no guarantee of any future results, performance, or success.